So this will be the end of month review in which we're going to have a look over the yields, and then we're going to follow that over with the bonds. We're going to start off with the monthly time frame. As in 3 hours and 25 minutes, this candle that we're seeing here, the latest candle that we're currently seeing now, will close. Now anything can happen, surely. We could close below 4.404, or we could trade above the highs at 4.739. Anything's possible. We'll get into the intraday perspectives later on to see why there's a lower chance of us going below 4.404 and staying within that range there, because that month there, that candle, which is a bearish hammer, which in essence it's a hammer back down into a discount array, because we're currently in a bull market from 2020. All right, so you could say that this month has hammered into a discount array before rallying back up to 50% of the monthly dealing range. Now, monthly as in the days within the month, but when I mean the dealing range, actually, we haven't even gone to that yet. We'll get to that in a minute, because this is an immediate high, right? But the dealing range from high to low before this rally happened, right, is what you would call a dealing range, which you'll be trading in. This would be considered an order block in which price action has traded to. Didn't really close inside of the bearish order block, but we did get a rejection from that, and also we got a rejection from the 50 to 60% point, 65% point, price point of the bearish engulfing candle that created a shift in market structure on the macro time frame. And this is on a monthly time scale, bearing in mind, guys. So what we're studying here is, in the future, going into next month, what is the chances for us to continue going up? Let's keep it nice and sweet and simple. What is the chances of the bond market trading upwards, trading to potentially 5%, even higher? I'm actually looking to take that out, actually, so maybe 5.2. Now, let's zoom in, right? Before we actually zoom in, let's have a look at the levels of importance before we get to this level here, because what we've got here is 2018's high broken, spiked, manipulated through in 2022, candle body break in late 2022 September. We created a imbalance in price, or fair value gap, or BISI, buy side imbalance, sell side inefficiency. We created that there. It's obviously not on the chart at the moment, just so that I can keep the charts nice and clear. We rallied into that area, that was the low there, and we rallied from that area there. So you can see it's very tight, not really that much space for an imbalance. That was the immediate high, which would have given long smart money confirmation that the highs, this next high, would have been broken, and the 5% would have been next on the cards. We got that straight. There was not one down close candle on a monthly time frame. We did get sell stops taken intraday, but on the macro time frame, we were bullish for 1, 2, 3, 4, 5, 6 weeks, 6 months straight. Took highs out there, created an imbalance there, but we failed because we closed below that imbalance, showing that there's a good chance that it wasn't going to hold. We're looking at this candle, sorry, my cursor's showing this candle when we should be looking at the 1st of November 2023 candle. We obviously retrace, man, and you get a rally back up. This would be considered as a long-term high, long-term low, intermediate. Now, if we were to have a look at the weekly time frame now, bearing in mind that we're currently showing a bearish hammer, in a bullish market structure. As you can see, where we caused the hammer was when we on Monday the 13th of May, we actually traded into the weekly buy side imbalance, sell side inefficiency that was mapped out right here with the purple rectangular box. I'm going to zoom in a bit here just so that we can study this area right here. All right. So this year started, we broke buy side liquidity, we continue to trickle, we failed to take the lows out here, so we'd want to see a continuation, a candle closure here, minor retracement into, could be considered as an order block. Very rough though. Confirmation, but not a real strong confirmation as I'd like to see hands taken. Retracement, order block, bullish engulfing, buy side imbalance, sell side inefficiency, imbalance in price, nice and tight, bullish Marubozu. Then we get spinning tops, bullish spinning tops, shifted market structure with the imbalance in price going into the ending of April now, coming into the beginning of May. Sell off, 3 bearish candles, and for the past 2 weeks we've been bullish, with this week spiking to very close to the open of the 29th of April 2024's candle. Where we rejected was an area of importance because this was a weekly fair value gap with the consequent encroachment. Bang on. Have a look at that. Bang on. The reverse was bang on. All right. So not only did candle bodies fail to hold the lower displacement weekly fair value gap, the wicks, the manipulation, the very, very manipulation, the essence of smart money, all right, failed to close above the consequent encroachment, which is the median point between the weekly fair value gap, the upper and lower displacement points in price action. All right. Now, this higher and lower displacement in this fair value gap right here was already mapped out once this occurred. But I also noted this buy side imbalance, sell side inefficiency. So in essence, what I was looking out for was a retracement back down into this area, but to also accommodate for wicks or manipulation into this area here, which we actually got here. And this can all be seen on my trading view. So I can't even go back. No, I can actually. It can all be seen here for the mines that I've done so far. This is free of charge, guys. No one has to pay a penny. I do this every single week without fail. I update the charts every single week without fail. So this week we have a shooting star in which buy stops were taken. 1, 2, 3. 3 weeks worth of buy stops were taken, trading into an imbalance here, but failing to close, obviously above that area there. We are in I mean, just right now, having a look at it, we're above the weekly fair value gap. That could change. What could we expect at the daily time frame? So just make this nice and neat. So this is the immediate dealing range that we're dealing with right now. 4.476 is my next point of interest. As I'm a scalper, I don't tend to look for long dragging days. I tend to look for the lowest hanging fruit, which right now I see that there's a higher chance for price to continue to retrace back into the 50% equilibrium, which is from the dealer range low to the dealer range high, already in the discount. So if it was to continue in the discount, it could even continue down into this imbalance in price, which could be considered as a inverted fair value gap. So going into next week, anything's on the cards really. I'll be honest with you guys. Let's just move this there. Beginning of the week, ending of the week. I'd like to see 4.476. 4.476 is my next point of interest. 4.476 is my next point of interest. And that is assuming that we don't get that today. I want to touch on the intraday timeframes. It's not really that important today, but it's going to be important when placing trades and actually executing in the market so that I can capitalize off the movements. And we can clearly see that, but just in the midst of both Fibonacci's. We're already in a discount, but we're in a premium based on the immediate. Let's have a look. The immediate, you can see the highs. The immediate dealing range. And it's funny because I could use a dealing range from this week, but I'm going off a higher time frame. I'm going off the higher time frame. I'm going off a daily. So this is actually a daily, whereas this is really a weekly. Could even be considered some monthly, but we'll go for a weekly. So going forward, I'm looking for 4.476, which is a continuation to the downside for the bond market. It's currently 12 minutes and 47 seconds, and I think I've done a bit. For the first video for YouTube, I think I've done okay. I'm always going to improve, so I'd like to hear you guys' comments and feedback as to what you believe price action is most likely to do this week, or should I say next week, and for the ending of this week, if you guys tune in before markets close. And yeah, we're gonna move on to the yields, and yeah, man, move on.